Hadirin kami mohon untuk berdiri. Ladies and gentlemen, please rise. Presiden Republik Indonesia tiba di tempat acara. His Excellency, the President of the Republic of Indonesia, has arrived at Mangupura Hall. Hadirin disilakan duduk kembali. Ladies and gentlemen, please be seated. Selamat datang di Mangupura Hall pada acara Bali Fintech Agenda. Welcome to the Mangupura Hall, to the Bali Fintech Agenda. This is a joint event between IMF, the World Bank Group, and the Government of Indonesia. Mengawali acara, kata pengantar Gubernur Bank Indonesia. May I kindly invite the Governor of Bank Indonesia, His Excellency Mr. Peri Warjiyo, to introduce His Excellency, the President of the Republic of Indonesia.
Your Excellency, the President of Republic Indonesia, Mr. Joko Widodo, Managing Director of the IMF, the President of the Working World Bank Group, Chairman of the IMEC, Development Committee, fellow governors, ministers, distinguished speakers, ladies and gentlemen. A very good afternoon to all of you. It is an honor for me to welcome you to this joint IMF World Bank prestigious seminar on the Bali Fintech Agenda. And today we will discussing the 12 key elements of Fintech development that policymakers and international community may consider. I am evenly great honor to introduce our first speaker, our President of Republik Indonesia, Mr. Joko Widodo. His commitment to the reform is unquestionable, lifting the ease of doing business, revamping the investment climate, accelerating development in infrastructure with the scale and the speed that never seen before in these countries. He is a very humble person, close to the heart of the people through belusuan, man of action, kerja, kerja, kerja. But his vision on the digital economy and finance is far-reaching. How can Indonesia and the whole world can embrace digital economy and finance to develop the economy, to strengthen financial inclusion, to lift up SME development for the benefit of welfare of the people. So, without further ado, we kindly invite the President Republic of Indonesia, Mr. Joko Widodo, to deliver his opening remark. Your Excellency, Mr. President, please.
Assalamualaikum warahmatullahi wabarakatuh. Honorable Managing Director of the IMF, Madam Christine Lagarde, Honorable President of the World Bank Group, Mr. Jim Yong Kim, Honorable Head of Government, Ministers, Ambassadors, and senior officials, Honorable CEOs and executives, distinguished guests, ladies and gentlemen, good afternoon. As the many fintech and digital economy innovation continue to sweep the world, I would like to remind us of the regulatory principles which made the modern internet a global and transformational success almost exactly 25 years ago. Arguably, the modern internet was born almost exactly 25 years ago with the creation in the United States of the first modern web browsers, namely Mosaic and Netscape Navigator. This began the era of the first internet boom with companies such as AOL and Yahoo. What made this first internet boom possible was a visionary policy decision by the administration of President Bill Clinton to create regulatory environment which came to be known by two principles: light touch and safe harbor. This very relaxed and welcoming regulatory environment first prevented excessive government interference too early in the process of innovation. Second, give innovators the confidence to experiment without having to fear civil or criminal liability if their experiment fails. As a result, innovation flourished, creating not only great wealth and many economic benefits, but also laying the foundations for the modern internet of today. Today, we are again in the midst of another great flowering of internet-based innovation. And more dramatically, today's internet boom is reaching deep into the foundation of the economy, into the very payment that are the lifeblood of daily commerce. PayPal, Apple Pay, Alipay, WeChat Pay, and many other such innovations are transforming daily life for hundreds of millions of people around the world. Ladies and gentlemen, similar to the original internet boom 25 years ago, we should not rush to regulate these new innovations, but should allow innovation and experimentation to flourish first. That means we should once again approach this big wave of innovation with light touch regulation. And we should provide safe harbor to those inventors and entrepreneurs who are bringing radical new tools to society. Innovation comes from experimentation, and many or even most experiments fail. That is the nature of experiment. To punish failure is to discourage experiments and without experiment, there simply cannot be innovation. Therefore, it would be contradictory to talk about wanting innovation, but then to punish failure excessively. Ladies and gentlemen, while many of our principles still apply clearly, today's internet penetration is vastly greater than it was 25 years ago. During the last 25 years, internet bandwidth has become hundreds of times larger and faster, enabling richer applications and faster spread across larger populations. Today, things go viral. What does this mean? It means that excessively restrictive and protectionist regulation within any of our national borders will probably only serve to push our consumers toward the unregulated areas of the internet. In many cases, we will end up pushing our citizens offshore, where they are even farther away from our regulatory reach. What we as national regulators would achieve if we regulate too restrictively, or if we try to move toward a closed system inside our national borders, is merely to drive economic actively farther away into cyberspace, where not only we cannot regulate it, most likely we will not even know it is happening until it is too late. Therefore, I believe that openness to global standard and global platform, in addition to light thought and safe harbor, are not only desirable policy, but merely realistic policy. In Indonesia, we have to admit that we still have much work to do to socialize these realities and the pragmatic need for openness and light thoughts to our own bureaucracy. But I hope that we can all help each other to promote openness to global standard and global platform. Thank you very much.
Bapak Presiden, kami mohon untuk tetap berada di atas panggung. Acara selanjutnya adalah sesi foto bersama. We invite all the panelists to come to the stage for a photo session. Please kindly smile. Terima kasih. Thank you very much. Secara khusus kami ucapkan terima kasih kepada Presiden Republik Indonesia. Hadirin kami mohon untuk berdiri. Ladies and gentlemen, please rise. Presiden Republik Indonesia berkenan meninggalkan tempat acara. His Excellency the President of the Republic of Indonesia will now leave the Mangupura Hall. Ladies and gentlemen, please be seated. Hadirin disilahkan duduk kembali, acara kita lanjutkan kembali.
Masukin podium dulu.
Enggak, itu di batang podium. Katanya ada meja satu betul. Udah jadi. Masuk. Masuk.
It's okay. The whole system, yeah. They just reported this.
So, can you hear me okay? Can you hear me? Yeah, excellent. Good. So, distinguished guests, ladies and gentlemen, thank you so much for being part of this event, and a warm welcome to all our panelists here. What a terrific panel. I would pay money to have the opportunity to have each of these people on my CNBC program every morning. That would be wonderful. My name is Jeff Cutmore. I am a CNBC anchor. I present a program called Squawk Box based out of London, and hopefully you've all seen it, and hopefully you'll watch it on the new CNBC Indonesia. Now I've satisfied my boss. Let's move on and talk about the panel. So we're here to talk about fintech, and I just want to make a couple of comments, and then let's get into the conversation, because you want to hear from our panelists and not me. And my comments would be this. Fintech at the moment is disruptive, chaotic, and uncomfortable. At its most crass, it represents a cryptocurrency ICO that has been launched to fund the ego of someone who then wants to go and invest it elsewhere, or perhaps just buy themselves the latest Learjet. At its most simple, and I think this is the point to remember, at the end of the day, what is fintech? Fintech is only about the introduction of technology to improve or create new services that make people's lives easier. So bear that in mind as we think about the uncomfortable change that is being foisted upon the legacy banking system, the current financial architecture of the world, and of course governments that are having to react very quickly. So that's my piece over and done with. Let's move on. And I want to say thank you so much again to our panelists, and just give a very quick name check, because this event is being broadcast live in part on CNBC. So just a warning, be aware that you may be taken in a cutaway shot at some point. What was it the moderator said? Smile if you're on camera. Sri Mulyani Indrawati, thank you so much for being with us. Development Committee Chair, and of course the Indonesian Finance Minister. Jim Yong Kim, the President of the World Bank, welcome. Christine Lagarde, Managing Director of the IMF, great to have you with us. Leseche Hanyaho, the Chair of the International Monetary Financial Affairs Committee, and of course the Governor of the South African Reserve Bank. welcome, and Mark Carney, Chair of the Financial Stability Board and Governor of the Bank of England. Let me, if I might, just get quick comments from each of you here. The Bali principles set out an agenda, and they also acknowledge the opportunity that technology is creating to transform the economic and the financial landscape. So, Madame Lagarde, if maybe I could start with you, and it's the same question for everybody, and that question is, from where you sit and the job you do, what are the key priorities in terms of this Bali agenda, and what should it focus on achieving?
The Bali agenda comprises 12 key elements that we produce jointly with the World Bank. So it's a joint production of Jim's team, my team, to alert all our member countries to the key items that they need to check on their own priorities, on their own policies, to make sure that they obtain what President Joko was saying, in other words, reap the benefits of Fintech and avoid the pitfalls of nasty stuff happening in the darkness and using Fintech as a conduit to move money around. From my perspective as the IMF, two priorities. One is make sure that it is used in order to include as many people in the financial world. And second, make sure that it does not damage the financial stability that is a common good for all of us.
President Kim.
So, I don't think it's...
Yeah, it doesn't work. Sounds.
Not mine?
Give it a go.
Thank you. Thank you. There we go.
No, Christine, don't do that.
So let me also start by thanking Christine, the IMF team, and I just want to congratulate our two teams that have worked so hard to put this agenda together. And so for us, the mission is to end poverty and boost shared prosperity. So it's looking around at some tremendous innovations, the Aadhaar system in India, M-Pesa system. There's so many different innovations, but they've been very localized. And so our goal is to make sure that everyone can benefit from it, but also our sense is that there are innovations in the technological world that can help us leapfrog generations of bad practice, generations that would take forever in terms of reducing corruption. We actually, we talked about cryptocurrencies, but we think distributed ledger has huge potential, and we issued the first blockchain bond in August, where we created, allocated, transferred, and managed the entire bond through blockchain technology. And what it did is it reduced paperwork and it reduced our cost. And we think that's something that could be extremely helpful in the future. So the focus is, we at the World Bank Group have just had to admit that we're not keeping up with all the latest developments, and we're not doing it in a way that would help our clients take advantage of the great things that are coming out of places like Silicon Valley, Israel, other places, but then also manage the downside by having a good policy environment. So we think there's huge potential. The financial inclusion, universal access to financial services by 2020 is one of our goals. It will not happen without deeper and deeper engagement with the technology world. But I think also what I've learned, out of the last 4 weeks, I've spent a good part of 2 of them in Silicon Valley meeting with companies, and I'm just telling you that things are happening so quickly. Tom Friedman wrote this great book about the technology industry. He said it was the first book that every 3 months he had to revise it completely, because in 3 months the premises of what he was writing about could have changed completely. That's how fast it's moving, and we at the World Bank and I, because we interact with so many countries that don't have a Silicon Valley, it is absolutely our responsibility to keep up with the changes.
Thank you. Minister Indrawati.
Yeah, I think this is the response of the IMF and World Bank when we discuss about many countries is really facing now what should we do. President Joko mentioned about 2 very important principles, light touch and safe harbor. But how we are going to be able to embrace, enable, reinforce, and fostering this new technology, especially on the financial sector, while at the same time, we are going to make sure that this change is not going to create a severely disruptive that is damaging the social as well as the economic stability. It's always this kind of constant tension. So for us, IMF and World Bank coming with this Bali principle is going to help many countries to have at least an idea about what is the policy framework that we as a country will be able to prepare and be more optimistic, seeing a technological change not as a threat but as an opportunity to move forward. But we also make sure that this light touch that the President Joko mentioned is going to make sure also safeguarding or protecting the consumer, and at the same time is not going to jeopardize the stability. This is really a very important time for many countries in the world. Indonesia at this moment, we are receiving potential investors coming to Indonesia, whether they are in the form of Google, Amazon, or any other Alibaba, and the blur between the financial institution and system with the payment system, with the technology which is service-based, is becoming very, very unclear. So this is going to create quite a lot. Is this still in a real sector activity, or this has become a financial sector, and what kind of regulation that we really need to provide? Not to mention what kind of taxation and data protection that we have to actually formulate in order for us to be able to, on the one hand, creating a light touch, just like President Joko mentioned, but on the other hand, we are going to be able to make sure that this is going to be good and have a positive impact to the economy. And this is going to be one of what like to see institutions like IMF, World Bank, other institutions, other players, collaborate with private sector to be able to actually guide in this very fast-moving environment.
Thank you. Governor Hanyaho. I think we're going to run another microphone onto the stage for you, if we could.
I think that 3 quick points. If indeed what FinTech is doing is to deliver financial services in a smart way, we need smart regulators. And so what we are going to be faced with is that we need to be having regulators who are FinTech savvy. Naturally, when this thing began to emerge and you speak to supervisors and you say, there is these things happening, the natural instinct is, how do we regulate this thing? But let's turn this thing around and say, if as regulators we think that we protect users of financial services, and we would like users of financial services to have cost-effective services, then the narrative changes. And what I liked from the principles was that it was beginning to say that the objective of regulation is not just about stability of the system, but it's also about accessibility of financial services to the majority of our people. So you bring then the issue of financial inclusion here, and I will just round off this thing and split it into 2. And then you could talk of domestic financial inclusion, which means that it could actually make the delivery of even government services much more accessible for people, much more cost effective. And in a way, to deliver some of these things, some of the technologies, you do not necessarily need a smartphone. The phones that people are having, there are lots of services that you could actually roll out to people. So for me, that is the first thing. The second and the last one has to do with the costs that people face in remitting money across borders. And I think that for me, when I looked at the innovations in this space, I asked myself a question: how would you bring down the cost of cross-border remittances. Mostly, I think that it's the World Bank studies that showed the importance of remittances from the developed world to the developing countries, and the cost that people are actually experiencing in delivering these things. And what I'm drawing from these principles is that they are striking a necessary balance between protecting the financial system against abuse, and at the same time focusing on you could actually bring more people into the financial sector.
Thank you. Governor Kami.
Okay, it's working. Let me make 3 points, but first I would just want to commend the World Bank and the IMF for this initiative and the President for his sponsorship of it. I think what we're all saying, and picking up where Governor Kanyahu started, is we're all looking to embrace the promise of fintech. And we have to go very quickly to what it actually means for people and businesses. So it's financial inclusion globally, it's financial inclusion in all our societies, it's access to more services, keener pricing, more competition, but it's also financial inclusion for micro, small, and medium-sized enterprises, the same quality of access to finance and service as large multinational corporations, something we don't have in any of our economies today. And it's also to improve the resilience of the financial system. And I think we all think that done properly, fintech can add to the resilience of the financial system. So that's the first point, embracing its promise. The second is to get practical and say, well, and this is part of the agenda, is how do you enable those new technologies? What do we actually do as you move back from the consumer to the technology? What can we as authorities do? And part of it goes right into the infrastructure that we oversee. So I'll use an example in the UK, which is the large value payment system. It's called RTGS. The central bankers in the room all oversee similar ones. What we're doing is we're reforming that so that it is a plug-and-play system, that the innovators that the President spoke of, they can figure out different ways to plug into that system, bypass the banks, have direct access, and then provide more cost-effective services. Now, one of the big opportunities there is exactly what Governor Kanyahu just said, which is around cross-border payments. They are currently 10 times the cost, at least, of domestic payments. Unacceptable. We're working with the Bank of Canada and the MAS, both governors are here, of looking at other ways of lowering those through DLT and other technologies. But just by changing the access to your core system, you can start to make progress here. There's issues around data. Let me make one quick point on that, if I may. We can empower digital IDs globally, the same ID for corporations. We've done it in the financial sector. We work together on this for the derivative markets. There's now 1.2 million LEIs, legal entity identifiers. This is highly efficient. We should spread it across corporate identifiers so that everybody in the world can instantly know the client. That's the way you also supercharge cross-border payments. Let me move to my last point, which is around competition and empowering competition. A big emphasis on that in this agenda. I mentioned equality of access to the core of the system. That's one way you empower competition. So non-bank payment service providers have the same rights as banks to access the core of the system. What about non-banks being able to deposit with the central bank, having access to lender of last resort? The President spoke of light touch, or I'd prefer, and I'm under the control of the chair of the FCA is here with his sandbox, proportionate regulation, early on proportionate regulation as that innovation is happening, and also proportionate and quick access to licenses so people can get out and experiment. And again, in the UK, that's what we have focused on. So what I like about this agenda, just to finish, is it goes high level but very quickly brings you to the practical. What can we as authorities do to help create an environment for that innovation?
Thank you very much. I mean, the context in different countries is obviously different, but the outcomes are very similar in some ways. And particularly here, it feels that the issue of inclusion and poverty reduction is a key one when it comes to embracing some of these technologies as they're applicable to perhaps disparate communities spread wide, mobile technology that can be utilized very effectively. President Kim, can I just ask you to make some specific points about that issue and how that affects what you do?
So technology is having a lot of different effects in developing countries, and I talk about this all the time. One of the definite effects it's having is it's raising everyone's aspirations. So if everyone gets access to broadband, and we actively are trying to ensure that everyone has access to broadband by 2025 or so, then what you'll see is everyone will be able to see how everyone else lives, their aspirations go up, very specifically their reference income, the income to which they compare their own, goes up. And so expectations are very high. And then if you look at, so what else is technology potentially doing to paths out of poverty? And you know, the story I tell all the time is in Bangladesh, the number of new jobs in the garment industry has dropped precipitously in the last 5 to 10 years. And part of it is because the Bangladeshi factory owners are buying robots to make clothes. They can a sew bot, it's called, SCW bot, can sew a shirt in half the time that the most efficient Bangladeshi worker can do it. And so those are they see what they can have. Technology is going to affect the workplace. And so the question is, are there new models that come out of the fintech world that now can be applied to go around the normal development process? You know, agriculture, light manufacturing, heavy industry has been the assumption in development economics that all countries eventually will go through that, and the competition will be over lower wages. Well, the assumption now is that lower wages is not really going to be a competitive advantage. And so what do you do? And outside, Christine and I went through and met some of the financial innovators, and I think there's great hope that some of those models, our friends Eric and Candace from Ant Financial were out there. You know, if you're on the Alibaba or Tencent WeChat systems, you can get up to $150,000 in 2 seconds, because they don't need to shake your hand and do the regular know your customer type things. They know from your online behavior whether you can handle a $150,000 loan. And so if you get immediate access to $150,000, and then they give you access to markets, marketing, you can do your accounting online if you're part of the Alibaba network. If you get access to all those things and can start a new business, that may very well be a potential path for countries that are not going to be able to attract the garment industry, are not going to be able to attract heavy industry. So it's not just that it's important, it is actually partly causing the problem, higher aspirations, fewer jobs. But we feel that there are great new innovations that could give us a completely different approach to how you grow an economy and how you create jobs.
Okay, thank you. I just want to come back to some of the issues, Governor Carney, that you raised about regulation and about financial stability. Let's put this event in context. We've seen a difficult period for many emerging economies. The fear is one of liquidity flowing away from markets. In a way, the challenge that fintech brings is it takes liquidity away from the existing legacy banking system, a banking system that's been built over decades and has robust structures and has been tested by many financial crises. Is it a good idea to allow cherry picking by fintech businesses of profitable segments of banks, and then that liquidity to melt away from institutions that need to remain robust when conditions are tough? Isn't it a good idea, therefore, to slow the pace of innovation and hold back some of those businesses that may be running too quickly?
I could rephrase your question and say, is it a good idea to protect the banks from serving their customers better? That's what we're talking about. We're talking about innovators serving customers better. Look, I'll go back to the UK. 1/2 of small, medium-sized enterprises in the UK, 1/2, only rely on internal finance and only intend to rely on internal finance, in part because of the hassle and cost of accessing the banking system. Now, that's not taking liquidity away. It's providing new liquidity to those. And some of the things Jim just spoke of, those types of models, perhaps by different providers, but those types of models are the ones that will reach small, medium-sized enterprises, micro enterprises. The other thing I'd say is we as authorities have a responsibility to make sure that the banking system is ready for these changes. And last year we ran a stress test. We ran 2 stress tests. One was more highly publicized, but the other related to exactly what you're asking, which was the stress was, how will you look in 5 years' time in a world where customer acquisition costs have dramatically changed, where you have intense competition from fintechs, where the value chain of banking is being disaggregated, and that was the essay question. It was a little surprising to us that we as the regulator had to put that essay question to the boards, but it's their job to think it through, and it's our responsibility to ensure that the innovations can happen in a responsible way, in a sustainable way. But I don't think you'll find anybody who is looking to protect the incumbent from innovation that's serving the clients better.
Thank you. Let me ask you a question specifically then about the emerging market context, because where you have countries where there is some sizable ownership of banks by the government, like the UK, for example, at times recently, should you run at a different pace or manage the situation differently? Minister, can I ask you to respond?
Well, but this is exactly your question, is the classical problem that faced by many policymakers, in which you are going to have an innovation technology that will disrupt the old business model, that maybe they are going to promise something positive, for example, like the penetration, low transaction costs, then financial inclusion, with the old business model which is still heavy in overhead costs. So the question in this case is always what should we do as a policy maker? This is regardless whether this bank owned by the government or not, but this is just how this transformation could actually have the maximum benefit for the economy and the people with the minimum, as much as possible, the transition cost. The dynamic is always like this. The existing business model, in this case the banking, will argue that, well, we have to comply with so many prudential regulations, safeguard, and all those things. And then this is totally new business model, which is not having the same level playing field. So the first question in this case is always, do we have a level playing field? That is allowing this competition, Mark mentioned competition, to be fair. And of course, this can be used in framing by the level of competition, or even level of competition can be used to protect the existing business model and stifling the new innovation. So for government in this case, I think if you hear from President, you ask me as a DC chair or as a finance minister of Indonesia. If you ask me as the second role, President Joko has already mentioned that he really want to embrace, he want to really like reinforce this change. He even want to use this technological change to pressure the existing business, even though this is state-owned, to be more open and competitive, because he doesn't believe that protection and close policy is going to good to serve not only the people of Indonesia, but also our own business in this case. This is just creating a totally excessive fat or rent-seeking even in this case. So for Indonesia, we have the leadership like President Jokowi is actually very, very clear in terms of direction. So leadership is important, and that is the direction that we have. Now, the next question is, what kind of transformation? What we could do is, of course, for the existing business model like banking, can they do the innovation just like as agile and as innovative? They are going to finance the championship, innovation. It could be that some of them will come up with a totally different idea, and that's good. but maybe not all of them is going to survive. But on the other hand, the new business model, like in Indonesia, we have Gojek, which is going to become a GoPay. They definitely want to become a payment system in itself. They are closed circle. This is something that then threatening the business model of the old banking system, in which you have a brick and mortar, and that's creating a huge overhead cost. And the government of Indonesia is allowing that to prosper, the new innovation to develop. And we still have to struggle about how we create a level playing field. Central bank and OJK, that is Financial Sector Authority, have to make sure that there is also an element of customer protection. Not to mention, I think, taxation from my side. And then the last thing on the data and data protection. I think this is still very evolving. I do hope that this Bali principle, which IMF World Bank providing us, as well as all the discussion that we have in the G20 or an OECD, is going to provide government ability to respond in a more aligned with the need to change itself. My own role as a finance minister, we engage, we communicate, I invite them, we discuss, we try to understand their business model, and then what kind of fiscal policy, taxation that is going to be able to continue providing a safe space for them to innovate, while at the same time providing time for the old business model, a signal that, hey, you need to change. This is coming, and it is now in front of your door. So this kind of policy response, which we try to do. I don't think that it is perfect, but I think we learn from other countries, and we learn from many discussions among policymakers as well as engagement with the private sector.
Governor Hanyaho, you talked about smart technology needs smart regulators. Does that mean it needs necessarily a new crop of regulators, probably under 30, who understand the technology maybe a little better than the existing regulators who license bricks and mortar banks as it is? Because this technology has the potential to leapfrog the old legacy banking industries that we have in the developed world, but it also has the potential to sidestep the existing regulation. And tax is one area that is particularly tricky at the moment with technology companies. So how do you address that?
Just three things. I want to start where Mark ended about these new tech regulators might be draining liquidity from the existing system, and I agree with what he had said. But the fact that the companies are attracted into that space must be telling you that the profit margins are good, because then otherwise these companies wouldn't have been attracted there. So we might be having a competition issue here, so they must come in. Yes, we need smart regulators. I had found myself having to recruit into the regulatory space IT professionals, and traditionally, where do we recruit regulators? Amongst lawyers and accountants. And what you actually need to be having are people who understand data science, people who understand technology. Recently, we licensed 2 banks in South Africa. None of those banks are going to open a single branch in the country. All their platforms are based on mobile technology. One of the banks actually calls itself Bank Zero, and the idea is that they will have 0 branches and they are going to have 0 fees. There are lots of other things hidden in there, but the truth of the matter is that they will make services, financial services available. And our political leaders, they always mean well. They would like to see branches of banks everywhere, in the villages, in the shopping centers, and so forth. That is not the future of banking. So the banks that we have recently licensed, none of them are opening branches. They are all based on smart technology. That means that central banks in the regulatory space, you need to be bringing people who would be able to oversee the cyber resilience of the banking system. So it is a completely different space. Does it mean that existing regulators are useless? Definitely not. There is still a big chunk of the banking system to regulate. Do we have to recruit younger regulators? Of course, that is how the systems continue to renew themselves, by constantly bringing in young people. You have got to keep them busy, because they get bored very quickly, and if you don't keep them busy, they leave the regulatory system.
But can I jump to that?
Very
because
briefly.
like a finance minister in Indonesia, 60% more of my staff is now millennial. So if you talk about all the regulators now, they are actually at the same age with the one which is outside there. So it's really how we are going to make sure that this young generation policymaker is not going to be like formed or shaped in a way that is an old model, but they are becoming more engaged with the community or the same generation that they have to serve.
So we've heard a lot about the benefits, we've heard a little bit about the challenges, and we've heard about the opportunity, I think, from President Kim here. I think, Madam Lagarde, my question would be, is there a general principle, or indeed 12 principles, that help us strike the right balance then between the benefits of this innovation and clearly some of the risks?
Yes, and that's really the whole point of this Bali agenda, which we were working on, which President Joko encouraged us to accelerate and to launch now. You know, the beauty of it is that it tries to secure the benefits arising out of the system and to guard against the risks that are out there. I'm a little bit concerned when I hear President Joko talk about the light touch, because it reminds me of the soft touch regulations that we had just before the financial crisis in 2008. So to that, I would certainly prefer that we use the Bali agenda as the source coming out of Indonesia for this proportionate regulation that Mark was talking about. Because what we have here is, you know, disruption that is caused by a lot of innovators out there, and it doesn't belong to the advanced economies, it doesn't belong to a category of people. When you go and visit Indonesia, you meet lots of disruptors who actually master a lot of fintech principles that they deploy, where they manage to get lenders and borrowers together, where they use distributed ledger technology to accelerate payments. So it happens in many other countries as well, including in the sub-Saharan African countries. So that disruption caused by those multiple innovators all around, which are disturbing the rent seekers. I think Sri Mulyani she's completely right. And the banks who feel disrupted are now looking at DLT massively. I think if you talk to any consultants in DLT, they'll say that their big clients at the moment are the banks. So they know what's coming, they see it, and hopefully we will manage to get some good productivity out of that process, because we need that productivity badly. Additional point that I would like to make, actually 2 points. One is, I think in the Bali agenda, we point very directly to the risk of what I would call, as a former lawyer, forum shopping. In other words, if there is no international cooperation, if there is no adherence to those Bali agenda key elements, then there is a risk that somewhere, somehow, the regulatory environment will be conducive to an abuse of the system, and will be the leak through which unwanted, unnecessary business is being conducted. So, you know, my critical point here is, it is not prescriptive, it is not either light or heavy, but it's a very strong agenda for all countries to actually look at each principle and ask themselves, am I addressing this issue? Am I protecting consumers? Am I guarding against the instability risk? And am I restricting innovation, which should not be the case? Last point, to my friend the governor's issue. They should be young, they should be innovative, but they should be both in the reg-fin environment, but also in the sub-fin environment. Supervisors and regulators must be equipped to appreciate whether a marketplace is in fact a marketplace, or whether it's actually taking deposit and eventually stepping into the banking system. Because if we cannot guarantee that, then we're going to face problems that we faced in the past whenever we had soft touch to the extreme.
And let me just bring this very much up to date with the messages we've heard this week from the IMF and the World Bank about the risks of a trade war between the United States and China. The new risk, it seems to me, is that technology becomes a casualty or the next frontier in that battle, and that we end up with two internets and competing payment systems and competing P2P tech advances and so on. How worried would you be about that development if that is indeed the direction we go in?
I think if that was to happen, and if it was not just two, I think it would be three that we're talking about, because the data aspect comes into play, and you could end up with a sort of US-dominated, Europe-dominated, China-dominated different regions. But that would certainly hamper the productivity and the benefit that can be unleashed from an international system that is protected against instability risks.
Governor Carney, you want to come in?
Let me just make a point to link to the core agenda of the fund and the bank at these and other meetings, and the FinTech agenda, which in the end it's about inclusive growth, making globalization work for all. And one of the great opportunities of FinTech is that we can make tremendous advances on an age-old problem, which is knowing your client. It's an issue for anti-money laundering, counterterrorism financing, but it's also just an issue of the frictions of operating in the financial system, wherever you operate, whether it's here in Bali or in Birmingham or beyond. And through linking data sets, having clear identifiers, you can know your client everywhere. And last point, in a world that is a global economy that's redistributing itself, it's much more peer-to-peer, it's much more distributed, it's global supply chains. This is the promise of inclusive globalization. Yeah. FinTech can help make that work. And so we, on the technocratic side, if I can, apologies to the Minister, you cross over the two, but you've been a technocrat, and you will be again, I hope. But we on the technocratic side, we have you still are, we have the ability to build that framework that supports truly inclusive globalization. Now, what happens with the trading system happens with the trading system, but this agenda can make it happen.
But the beauty is that you have low barrier to entry, and it can happen anywhere, and you have the ability to scale, which can actually turn a system into something that works, is profitable, and can disrupt.
And just to wrap up, if I could just throw in a slightly off-topic question, but I think it is relevant. One of the important issues is clearly that we have trust and integrity in our regulators and our policymakers. And is it helpful in that context? Can I ask our two governors that the word crazy has been thrown around in the last 24 hours? I guess Mr. Powell may be in the audience, but briefly, could I ask our two governors just to respond to that? Does it in any way demean the integrity of the institution of the central bank when that kind of comment comes from the leader of the state?
I didn't see the comment, and I'm not sure if it had to do with FinTech.
Well, it was President Trump, if you want to know, who said it twice about the Federal Reserve.
I don't respond to what presidents say. But let me just make the point that if we are to advance this agenda, regulators need to be given the space to act independently without a continuous political interference. We need to be given that space. And if we are to promote innovation within the confines of our mandates, we need to be having that space. I think that central banking and the institution of central banking and the role central banks play is an area of contestation. It happens in the best of democracies. You will have contestation in society about institutions, and I think that we shouldn't take our eye off the ball, that institutions matter, and quality institutions matter even more. And if we are to advance this agenda successfully, we need to leave quality institutions to operate in the manner that they are designed to operate.
You've brought us very much back on topic, I think, and it is relevant. Governor Carney.
I think the sanest way to answer that question is to associate myself entirely with Lissetja's answer. I'll just say one thing, though, on this topic, is that of the many qualities of Chair Powell, is he's an individual who really understands the plumbing of the U.S. and global financial systems. And one example is the reforms that are going underway on LIBOR, for which he's one of the sponsors, main sponsors. And that's an incredible advantage for the system at a time that the system is changing, to have someone in his position who has that level of technocratic expertise.
So to take it in a bit of a different direction, you know, I was growing up at a time when young people used to say, never trust anyone over 30, right?
And they don't now?
And the thing is, at our institutions, it's almost the opposite. We never trust anyone under 30. And we're not institutions that are good at having lots of young people running around doing new things. Okay, Christine's shaking her head, so I'll say, for the bank, yes. Right? It takes a long time to rise up the rates of the bank. So I think to our great credit, though, what we're doing with the Bali Fintech agenda is inviting disruption of our own institutions. And you know, I hope that everyone knows this is something that's going to keep going forward. I mean, we have to do this every time. The 12 principles are such a great start. But what we must do is continue to share with each other all the things that are happening. I was just in Silicon Valley with the founder of Stripe, one of the organizations that we saw out there. And he spoke so fast, and I knew his mind was working even faster than he was speaking. But he went from an MIT dropout to running a $20 billion company in a very short period of time. And what they're doing is moving just so quickly that what we promise and what we promise our clients is that we will be very open to being continuously disrupted by what's happening out there, and then trying to understand what's happening so that we can be an honest broker between clients, and for us, some of them in the poorest countries in the world, but then also this new world which holds so much promise, but which also could be devastating if not introduced in a way that's truly focused on making sure that the system works for everybody. You know, Patrick Collison was his name, the founder of Stripe. Yep. There was nothing he wanted more than to see his technology help lift people out of poverty. But he didn't walk into the world knowing how to do that, and we don't walk into the world knowing how he created his technology. So that conversation, which we're going to host through this Bali Fintech agenda that will continue to go, I think is the most important one we can have. Yeah.
President Kim, thank you. I'm getting a wrap-up signal here, but Governor Carney, you're waving more furiously.
Oh, no, one of the reasons why Patrick speaks so rapidly is that he has a clock that counts down the number of seconds he has left in his life in his office. So very quickly, I'm just going to make a different point, which if you want to change the world, yes, you can go to Israel, Silicon Valley, you can go to some of the other hotspots of tech, but you can also come to some of these organizations, because it is at this time when these core changes are going to be made, or not, to the enabling infrastructure that can help really bring finance to everyone in a way that brings inclusive growth. So some of those under 30s come here.
Madam Lagarde, do you want the last word, or with your indulgence, shall I wrap up?
You know, as Jim was saying, the problem is that they're all getting younger and we are getting older.
And on that bombshell, as they say, can we please thank our panel for their wonderful contribution, and thank you so much for joining us. Good, good.
Okay.
We're going to take a
Baik pemirsa Kemenq Korpu TV, baru saja kita saksikan The Bali Fintech Agenda dan saat ini kita akan memasuki penayangan event pilihan berikutnya yaitu Human Capital Summit 2018, A Global Call to Action. Event ini merupakan konferensi tingkat tinggi tahunan yang diselenggarakan oleh World Bank yang saat ini telah memasuki tahun yang ketiga penyelenggaraan tersebut. Dalam rilis yang disampaikan World Bank, Human Capital Summit 2018 A Global Call to Action akan membicarakan bagaimana Human Capital Index dapat dijadikan sebuah platform bagi para pemimpin pemerintahan dan tokoh-tokoh berpengaruh di dunia untuk membicarakan investasi pada sumber daya manusia. Event ini akan dibuka dengan opening remarks dari Presiden World Bank Group yaitu Jim Yong Kim. Kemudian dilanjutkan dengan pemaparan dan diskusi dari banyak sekali panelis-panelis dan tokoh-tokoh dunia yang luar biasa. Antara lain Lee Hsien Loong yang merupakan Prime Minister atau Perdana Menteri dari Singapura. Lalu akan ada Melinda Gates, Co-Chair Bill and Melinda Gates Foundation. Lalu ada Ibu Sri Mulyani Indrawati, Menteri Keuangan Republik Indonesia. Ada Ulama Suprun, yaitu beliau adalah Minister of Healthcare dari Ukraina. Lalu kita punya Asad Umar, Minister of Finance Pakistan, Abraham Tekeste, Minister of Finance and Economic Cooperation Ethiopia. Lalu ada Ivan Machavariani, Minister of Finance Georgia, Mari Kamel Kawar, Minister of Planning and International Cooperation Jordania. Berikutnya Teresa Zerwiriska, beliau adalah Minister of Finance dari Polandia. Lalu ada Zid Ladari, Minister Development, Investment and International Cooperation Tunisia. Achim Steiner, Administrator United Nations Development Program. Henrietta Fore, Executive Director UNICEF. Lalu Zuan Carter, Executive Director Result. Dan Karisma Faswani dari Asia Business Correspondent BBC. Baik pemirsa Kemenq Korpu TV dimanapun Anda berada, dari kawasan Nusa Dua Bali kami ucapkan selamat menyaksikan Human Capital Summit 2018, A Global Call to Action.